Hey, favorite pre-approved clients, Chad Lubin, Cross Country Mortgage. Hope you're having a fantastic week. I wanted to put this video out to you today. It is a very important day. It is Fed Day. We will see the Federal Reserve Board make a decision on what they're going to do with the federal prime rate. That's the index that banks borrow money to each other at. So it is not the index that mortgage rates are based off of. It does influence interest rate. Now, this is counterintuitive, but the main reason for mortgage rates increasing so rapidly is inflation. The prime rate is a tool used to combat inflation. So what we believe will happen today is a 75 basis point increase from the Fed. Their plan was 50. Last Friday, a consumer price index report, which measures inflation on the consumer level, came out way hotter than expected. And if you follow the markets, you'll know there was a sharp stock market sell-off and interest rates went up almost 0.75%. So the reason is the inflation. That's why rates are going up so quickly. So the markets actually want to see a more aggressive move from our Federal Reserve Board to show that they're serious in combating inflation. So we're hoping for a 75 basis point to 100 basis point decision by the Fed. That should bring interest rates down. Now, to be the bearer of bad news, we are just, unfortunately, for 30-year fixed rates and 15-year fixed rates, we have fallen off a cliff. This was June 8th. So we've seen a week of deterioration, massive deterioration. So you saw interest rates increase from about 5.25% on a 30-year fix to about 6% on Friday, and that continued on Monday about another 0.25% to 0.3%. The good news is there are longer-term adjustable rate mortgages where the rates hasn't moved as much. So we're doing a lot of ARMs right now, and the mindset of that, I know that's a 4-letter word to some people, even though it's a 3-letter word, that we believe rates will fall here over the next couple of years. Why do we believe that? We believe there's a recession right now. I believe we're already in it. I've said it many times. Stock market's down over 20%. There is massive inflation, the hottest inflation numbers in the last 45 years. And we're also seeing an inversion on the bond yield curve. So one of those three things by itself says a recession might be coming. All three of those things together say it's already here. So what's that mean? I've shot a couple videos about this, but if you look back to the recessions since 1960, there's been 13 of them. 12 out of 13 times interest rates, or 13 out of 13 times, excuse me, every recession mortgage rates drop. So I believe that will happen over the next 1.5 to 2 years. 12 out of 13 times, this is where people get it wrong, prices actually stayed the same for real estate or went up. Everyone thinks they went down because we have nearness bias of remembering the financial crisis. Well, that recession was caused by the housing market. This recession is not caused by the housing market, and none of the other ones have really been caused by the housing market. So the only time that home prices dropped was the recession caused by the housing market of 2007. So don't think that prices are going to go backwards and you're going to get a deal after a recession. It's not going to happen. There's 3.5 million less homes in our country since the financial crisis. That's right. We went backwards in inventory, and there's 13.5 million more houses needed than there was in 2007 because of population growth and the biggest generation to ever hit our country are millennials, and they're starting to have kids. They're starting to have their own households. So we have two generations fighting over housing. They're the two biggest ever, the baby boomers and the millennials. So it's just population growth, it's simple supply and demand. Prices aren't going to go backwards. Interest rates will. So keep looking, get in now into a home, and know you will have cheaper interest rates over the next 2 years. That's what I believe. So I'm here to help you guide through all this. The clients that listen to us used our lock and shop program, locked in their interest rates before all this happened. are obviously super happy right now. Those of you that are not, just know we might have to shift loan programs a little bit and adjust you into a fixed rate in the year or two when rates come down. So that's the mindset now. That's what we're doing for most people. I'm here to help you guide through it. I'm here to help you guide through this, and we're always available for your questions. Email us, chad@thelubengroup.com, or you can call us anytime, 312-731-4939.